Property listings hit a 3-month low. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Today I'd like to have a look at this article from Mortgage Business discussing property listings at a 3-month low. Now I know what you're thinking, but Florian, everything we're hearing in the news is about property going gangbusters, about it heading to the moon. Everything's great. Why would listings drop? Why would they hit a 3-month low? Well, let's have a look first. Let's start by just checking out some of the listing data from SQM. We can see here Sydney, yes, it's definitely going down a little bit. It's definitely lower since it was earlier in the year. We have a look here at Melbourne. Definitely lower since here, but nothing that dramatic or exciting. Brisbane, well, we've been trending down for some time now. Obviously, not many people are listing. We can see here in Canberra as well. Well, there you go. Trending down. Now, let's have a look at this article, which is saying property listings at a drop to a 3-month low. Is it that significant since it's been trending down in some areas and others? We haven't really seen such bold moves. But also, you've got to remember, if you have to sell now in this market when it's all crazy, you've got to buy back in. There was this 60-minute video about just the housing sector, and couples were talking how they sold for $100,000. But they didn't mention they had to pay stamp duty, all these other costs when they're going back in, lawyers' costs, real estate agent costs. And now they're renting their own home. So, new listing volumes dropped in May 2021 to the lowest monthly volume since February this year, but remain higher compared with previous years, according to research. REA Insights Listings Report, June 2021, which is a monthly report analysing new and active listings on realestate.com.au, has revealed that new listing volumes declined by 4.4% in May 2021. This represented the lowest monthly volume since February this year and followed a 7% monthly decline in April, the report said. The monthly decline in new listings was greater across the combined capital cities, down 5.6%, than it was across the combined regional markets, down 2.2%. which the report noted highlighted a more robust regional market. Despite the decline, the number of new listings was 61.6% higher year-on-year, with capital cities recording a larger rise of 68.8% than regional areas of 50.4%, the data showed. New listings in Melbourne saw the biggest monthly fall in May 2021, down 11.4%, which the report attributed partly to the COVID-19 lockdown. Canberra also recorded double-digit percent falls in new listings over the month, down 10.8%, the report said. Similarly, new listings in regional Victoria decreased by 6.6% month-on-month, marking the biggest regional market fall, the report said. On the other hand, new listings in Darwin are at the highest level they have been since May 2016, rising by 19% month-on-month and 155.8% year-on-year, according to the figures. Now, this 155, that's just because the entire economy was shut down. No one was going to list their property at the beginning of a pandemic. You'd be crazy to. New listings increased in regional Queensland 1.3%, Perth 0.1%, regional West Australia 19%, regional Northern Territory 48.3% during May 2021, the data showed. The report also said that each capital city and regional market recorded a year-on-year increase in new listings due to COVID-19 lockdowns and significantly low new listing volumes across the country at the same time last year. Meanwhile, active listing numbers, which means more properties were listed than sold, rose by 0.9% in May across the country, which the report said has highlighted the slower rate of overall sales. So we're starting to peak. Despite this slight increase in May, the total number of national active listings remains 13.7% lower year-on-year. Okay, so our supply is still down. Regional activity listings were down 27.1% year-on-year, while capital city listings were up 2.5% year-on-year. Active listings in regional markets fell to record low numbers in May 2021, down 1.7% month-on-month, the report said. It added that every regional market had fewer active listings in May 2021 than they had in May 2020, while demand for regional properties has remained strong as active listings continue to decline. Demand still exceeds supply, housing prices to rise, according to the REA Group. Commenting on the report's finding, REA Group's Executive Manager of Economic Research, Cameron Kusher, said that demand and sales had remained at higher levels compared with a year ago, and are still close to historic highs, but not as strong as they were prior to Easter. He said that this may be indicative of some heat coming out of the market, but also said it may be seasonal. Other impacts include the removal of government stimulus and increases in long-term fixed-rate mortgages, he said. Mr. Kosher said, the new listing volumes have historically fallen over the winter months before recovering in spring, and added that September would be a real litmus test for the market. He said key factors to monitor would include increased mortgage rates and demand levels. While demand for property remains undoubtedly strong, a slight softening in the market over recent months has resulted in fewer sales on a weekly basis, he said. He concluded, with less market stimulus and substantially rising house prices, we don't expect the level of demand to return to previous highs. Nevertheless, demand continues to outstrip the supply of properties for sale, particularly in regional areas, which should lead to further price increases, albeit at a slower pace of growth. So, well, suggestions that we're not going to see the peak of it, and there's still going to be price increases in property, even though listings are dropping to a 3-month low, but we're still so far ahead of previous years, and there's still an imbalance in supply and demand, everyone. This is when I'm drawing these curves, and you know what, let's jump to the tablet and do this now, guys. We'll have a look. I'll jump right here to the tablet, and what we'll do is we'll show what is happening. There we go. Okay, you can see. Good. So let's draw a simple supply and demand curve that we have here. Now, this can be shown for a lot of things. We've been talking about labor as well. So here's demand, and here is supply. So what's happened is, everyone, even if, demand has increased. So demand has increased. So this here is our new demand curve. But supply, demand to supply, has also shifted. It's decreased. Less people are going on the market, so the supply curve is all the way over here. So because, this was the equilibrium price that we had in the past, this level, quantity equal to price, because supply has decreased while demand has increased because of all of the government money, the government coming to the rescue, flowing into the market, but people aren't listing their properties because they're thinking, it's crazy now, I'd have to pay so much to get into property, I can't be bothered, we'll wait and see. That means we now have, less supply down here, but prices are up at this level. So we're now at this situation, everyone. We've got a combination where we've got less supply and greater demand due to the government coming to the rescue. And we've seen what that is. That's the home 2% home loans, guys. 2% home loans. I know it's not that many, but it's going to impact home builder, grants left, right, and center. Government intervening in the economy to not allow any creative destruction. I'm worried the precedent's been set for that. So it's going to get messy. What is the solution, everyone? What is the solution? What is the thing that we need to talk about and reiterate and approach our politicians for? And we need to get off this dependency on property. We're obsessed with property. Everyone in Australia loves property. We need to stop with property. We need to break our relationship with property. As a country, I think we've got an unhealthy relationship with it because this property has the other consequence of reducing our economic complexity. Is why would people risk starting a business or doing anything when you just jump in houses? And which political leader will have the cojones to push for change? You let me know. As always, thanks for watching. Please like, share, subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. You can sign up for SelfWealth or Stake, buy a merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, and I'll see you next time. Bye for now.